Good morning, sunshine.
Welcome to the real world. Whoa! Mortgage your house and buy Bitcoin with free air. There's no second best, okay?
Good morning.
Fuck you. GM. Tuesday, 20th of August, trade of the day. G fucking M. Let's look at the 4-hour trend before I dive down deeper. So, based on this, there's two paths Bitcoin takes. It either goes straight up, or it comes back and fills this one more time, and then goes up. If it's looking like this is going to build into something that pushes higher into some of these gaps, which I fully think we can, you'll either see immediate continuation. And so in terms of a trade, if Bitcoin breaks above 61.4, I would probably be looking to follow that. I think that would be the first time it's gotten above the 200 EMA, which is probably going to see it push higher, at least up into some of these previous levels, which I'm going to mark now in a second. And so I'll be watching closely if BTC does break there. If not, you're going to see the standard sweeps one more time back down, fills in that gap, holds, comes back up, and then that's where the breakout comes from. These are obviously the paths if we're going for a breakout, which isn't guaranteed, but you know, you already know that. So some untested levels, there's one. Untested breakdown points, there's another. So there's loads of inefficiencies above that we can go and retest. And there's plenty of reason why we would. And of course we have the big one, from the breakdown all the way over there. And I think that if we start to clear some of these levels, we're going to go for those. And I don't know whether it's going to be bullish beyond that continuation, or whether it's going to be a choppier path to get there. Who knows? But I'll show you really where Bitcoin has to go and what it has to avoid doing. So falling or dropping back here is fine. And dropping back is okay as long as it's more corrective in nature. So this move up was an impulse, quite a nice one as well. Get fucked. Delete this. There we go. Fucking piece of shit. All right, I need to move this. Okay. Here we go. So, pretty standard. If this impulse above these highs, if it is making people step back in and say, oops, we missed out, we need to get long, you'll see a drop off here. And if it's too many people getting long and it's the wrong side of the market, you'll see weakness here and it'll drop back down into this area. And if it drops in there, you're expecting that this move was all bearish and down we go lower, right? It's subtle, but the same type of move can happen depending on where the support steps in, which I would imagine should be somewhere around there. And you see the market drop off, but hold, and then build its way back up. And that is where your next impulse move would come, and you probably would break out. So very similar path can form, but how it develops will give you a clear directional indicator for where the market goes next. It should really just drop down and form a higher low if it's going to be bullish. That's, of course, if it drops at all. This gap can get left behind as well, which is what I talked about that other path, which is like this, just straight up. That's like that green path. And that's one where you just have to follow the momentum. And those are the best ones to trade often. They're the most difficult to trade, which is why they're the best to trade. Because a lot of times, you know, market's up and it pumps and it keeps going, it goes up and up and up. People aren't good at buying higher and higher and higher. But the logic is simple. If you're building systems to test that, no pullbacks, right? That's the whole point. If you're following a trade that has no pullbacks, then you should be looking at your very low time frame consolidations. It's like, just because something is moving in one direction only does not mean you can't trade it. You're literally following momentum. So you keep your risk tight. You wait for low time frame pullbacks within the higher time frame candle, but you don't expect like inefficiencies to fill and full retracements and all that kind of stuff. Because what's going to be happening here is people will probably be like starting to short already, thinking, oh, there's a gap here and gap there. Remember what I said, like the whole market is starting to look at day trading and think about day trading, and people are sharing how to day trade on Twitter, I've seen, and threads about how to make money in a sideways market. So all these people now who aren't day traders are going to be looking at these things and, oh, there's a gap. Yeah, but the gap, I mean, that gap will get left behind, right? At every point when there's a breakout, you get gaps that get left behind. Breaks away, does not come back, and continues. So don't be surprised if that's the one here. And I don't know if it is or not. For me, it would be continuation above this level that would tell me that. That would tell me that gap's not going to get filled. And then we're going to go higher first. And we've got some work to do above. But if it pulls back, there's the path. So I've got a couple of things in mind. I lean more bullish if you're talking the next few days or whatever. I think the red path is least likely because we've tried several times to break below that 57, 58k area, and the market held, and it had a sweep, and it had a retest, so you've got a pretty decent sort of inverse head and shoulders there. It's not really an under over because you didn't have a market structure break yet before that, depending on where you're looking at it from. But anyway, depending which time frame you're looking at it on. And so I think higher is more likely than lower, especially because I think the tendency of people would be to fade this. They feel like, oh, it shouldn't go higher, it should be bad, it should be bearish. Well, it doesn't have to be anything. And I know the higher it goes and the faster it goes higher, the more bearish it can be. Like, don't forget this. If you think that because you've got like a high time frame bearish view that the market shouldn't go up, you're doing it wrong. The most aggressive squeezes are in bear markets. So if it's bullish, you actually don't want to see it mooning, right? If it's bullish, I don't want to see us at 69k in a week if it's bullish. If it's bullish, I want to see it move up, sideways, more consolidation, more chop, move up, sideways. You want to see it grind higher. If it's truly bullish, you want to see it grind higher towards 70 and have a base built so it can break out from. Not just shoot up straight away, because then it leaves behind all the gaps. People FOMO at the highs and they get flushed down. So anyway, bullish paths. Am I high time frame bullish? Not yet. But bullish paths I see as more likely than bearish for sure. Green or black. And we'll see how it goes. If it's going to get bearish, I would wait. A lot of people, like, if the black path happens, people are going to think, oh, it's bearish again, failed breakout, and be, not quite. Not quite. I would be waiting for more confirmation on that. And I think that you want to be very clear in waiting for 58k to break, right? Remember, if a 58k breaks, where does it go? Like 53. So we'd have to come down and lose that, and probably here. Like, I wouldn't be looking for shorts until there. Because if this does break, it's going to go to here. Like, that's the next clear level I see. So trying to get short at this point makes no sense, right? The level that you're trying to lose keeps holding. So why would you short it as it rises? It's actually held. It's held a level and it's rising. So shorting it here makes no sense. So I would short from lower, or I'd be looking for longs. GM.